Good evening, everyone. This is Rodney with the Triton Wave Market Timing Strategy for Friday, August 17th. I'm sorry for the late start. It's around 11 o'clock Central Time, but I had to get it out of my neighborhood because they were aerial spraying for the West Nile virus, and I didn't want to be breathing all those toxins, so I'm just now getting back into the office. Okay, we've reached our line in the sand on the left-hand chart on the daily ES. We're butting right up against this upward trend line that goes, as you can see, all the way back to October 2011. And this is the inside track right here on the trend line, parallel line down here. We're butting right up against it, and the horizontal line going back to May and March. So this is the line in the sand. If we breach this, and on the 21 minute, it looked like it was going to roll over, and then it just started popping up in the overnight session. Some kind of news out of Europe that was encouraging, and it seems that the Cisco earnings were a little bit more favorable in terms of getting people into the market more. But we're right here, right at major resistance. So I decided that I'm going to squinch this map up a little, the chart. Now going back all the way to May of 2011 and taking a fib line here from the top to the bottom right here and extending it. So this is the top in April 2011, the bottom in October 2011, and we get a 1272 extension at 1459. Now also, if we take the top of this last peak that happened in March and in May, and we draw a fib line down there to this latest low, we get, let me extend that a little bit, we get a 1272 extension at the identical point. So it's right in here. It's 1458 to 1462. If this breaks, out beyond this trend line and closes above this closing high, this extended high of 1412, 1413, then there's a very good chance that we could make a quick run up to 1460, 1458, 1460. That, given that this does not hold. Right now, it looks like that may happen because the 21 is turning up, the daily is fully extended to the upside, and it just hooked up on T3, and all the waves for T1 through 5 on the 21 minute. Now, anything can happen overnight. I'd like to drag this graph over here, which is the 21 minute, I'm sorry, this is the 15 minute Aussie yen cross, and let me put a daily on that. And that's been going sideways also. It popped a little bit today. This is after this last hash mark is after hours. So anything could happen here. If this keeps on going up, then we are definitely going to see the S&P pop up, and it'll pop up really quickly because there'll just be a quick short cover. We did have another 100 million shares traded today than we have for the past 9 days. So we had almost 600 million shares traded, and the vol spread was actually looked healthier than normal. Well, normal being what it has been for the past few days. I'm going to just run through some charts really quickly. It's going to be a short video tonight. Goldman Sachs, reviewing Goldman Sachs, it's kind of stuck at the 144 exponential moving average. The waves still look good to the upside. And T5 is starting to roll over a bit. Actually, most of T1 through T4 is completely under zero. So I'm not big on Goldman moving up, but rather sideways. It could catch a pop here up to 108, even 115 if the market moves. Amazon popped 4 points, challenging the old highs of about 245. Could easily reach that. Again, if the market goes up to a 1272 extension of the S&P, then it'll probably take out its old highs. And all the waves look above zero. This had a surprise pop to the upside. It actually hit the 377 and took off from there. They all took off like 3 or 4 days ago. Above zero, first wave 1, then 2, then 3, then 4, and then 5, all in succession. They're all above zero, and this looks good for a move to the upside. Baidu had a bit of a pop today. It was up, it closed near it closed about 75 cents off its high, so at one point it was up 425. This popped up after going sideways. I actually thought it was going to come down and kiss off the 377 before it took off, but it took off. This nice, really nice move. The only thing is that the major wave down here is still hovering around zero. And even though the large wave came above zero on the daily, the larger waves down here on T4 and T5 on the daily are still very negative. And on top of that, T1 on wave 1 is the highest it's been in a year. So you'll notice that in all these peaks, there was at least a 15-point retracement here. On here, it was on July 2011, it went from 164 down to 125. On that peak, on this small peak, it came down 20 points. Went across in March. I'm sorry, in April, at the end of April, it went from 150 all the way down to 100. So this is now a 50% retracement on Baidu from the old high, from the last peak of April, and to a low on July 16th. So not only a 50% retracement, but this is like the biggest peak in a year. So this may go up a little bit more, or it may just be done. And what you have to look out for is, I was waiting for T5 on the 21-minute to go below zero. I actually took a position in this that I still have. And I'm feeling a little bit of pain, but if this, when the wave goes down below zero, comes up, and then goes back down again, that is a perfect entry on the short side. Now, all we have to do is wait for T1 and T2 and T3 to cooperate and to roll over with it, and this would be a good short candidate. It looks like Netflix is trying its best to get up to 69 on the daily, and it's actually turning, the wave is starting to turn back up again. And the waves on T1 through T5 are all above zero, even though T1 is hovering right around zero and so is T2. T3 is T5 is making a nice play above zero. So that could, with a market upturn, this could just like gradually work its way up to 70, which would be the base of where it took off from July 2nd, when it took off. Let me see, from 68 to 85, and then came back down, gap down, and this would come right back to where the lower part of the gap was at 67, 69. Apple is continuing its just incredibly major move here. And now T1 is completely above zero. So the old high, let's see what the old highs are here. The old highs are 646 and change. And we're at 636. Finished right on the highs, up 551 for the day. This could happen in a heartbeat and even more. This could take out, this could actually do a 1272 extension, and it looks like the 21 is above zero, everything's cooperating. Let's get a fib tool in here. And if the market keeps racing up, Apple could be at 674 very easily. So you have to watch for the subtle movements of what's going on in the 21-minute, and if we look at the 1597, which I like to watch. Okay, slow loading. Let's make this a 21 over here. There are some intraday plays here. Let's, I was looking at a 377 on Apple for intraday plays. So on the waves, on the wave chart, let me just make this other one. Hang on 1 second here. We're making it 21. Okay. So this has a nice play right here. This happened yesterday on the 14th. Actually happened on the 14th. When it went below, when T3, this is a 377 tick chart on Apple. Nice wave formation. It comes back here. It breaks nice and clean. The two waves together break cleanly below zero at 363. I'm sorry, 636 at 11:08 in the morning. These are all Central Times. And breaks above again at either the wave above or the same wave. Let's do the wave above because it's always good to get out on the next shorter wave. So it happened like 3 hours later, and that was a nice move. That's a nice put move or short move. 636. Let me see. Same day. Nope. I'm sorry. That's into the next day. So it's a 6-point move, and then when it moved back up again, the wave that happened at the end of the trading day. Let me see, on the 15th. So that would be yesterday, and then it exploded today. So that same wave is now starting to get closer to zero. So watch that. The 21 and the daily may be good charts to watch if you're in it for a long term. If you want to stay in it for a few days, if you're just trading it, then I would definitely use the 377 tick chart. Okay, my favorite stock that I'm waiting on after it's going sideways for like 2 months, up and down 5 or 6 points, sometimes 8 points, is MasterCard, and there it is. all these waves are below zero on the daily, and it is now 0.02. And you can see how these have been going down. I'll stretch it out here. Just little by little by little every single day. And actually tomorrow it should open up with this shorter wave on T5. It should be below zero. So it may pop a little bit, but this is going to expand further and further to the downside. Now this becomes, if this goes down below zero and comes back up again, and T1 goes above zero, and all these shorter time frame waves on MasterCard go up, they stay above zero and they go up, then this is up, up and away. So you're watching for two things. You're watching to see if T5 goes below zero tomorrow and stays there, and the T1 goes down and cooperates with it. If not, if this starts perking up a little bit and you see MasterCard taking off and T5, the numbers start changing to the upside, then if you follow the 21-minute, this will definitely go back up to 440. Otherwise, all the sideways movement is going to turn into a negative signal if this goes down below zero and stays below zero. Okay, let's take a look at GLD. And my issue with GLD is that even though the waves are heading above zero, they're all above zero, T1, T2, T3 is heading above zero, it's getting narrower and narrower towards zero. Same with T4. T5, the super wave is still above zero. The not so super wave is way below zero. The price just cannot get through all this congestion. Yes, it was up 0.93 to 93 cents today. And yes, the wave crossed to the upside and gave that to you and gave you that heads up for the move today on yesterday at noontime. But this isn't an all-out buy until it closes above the, let me see, that is the 144 exponential moving average. Otherwise, it's going to just be going up and down, and I don't know what gold is doing right now. Hang on one second, let's see. Okay, from the looks of this chart that I'm looking at, gold is doing pretty much nothing after hours. It closed here and it's the same. It had a pop the last 2 days, 1593, 1615. It really has to break. This is a nice channel moving up here, and a flat resistance line going across the top. It would have to break above all these closing highs of 623 to have a sustained move back up to 660. Where are we here? Right up to here. Let me scrunch this up. Scrunch this map. So it looks like it wants to do it, and if it does move up and take out this line, this resistance line at 1633, then this could easily pop to 1700. But until it does it, GLD is going nowhere. So let's remove this, and we have one more. Let's look at Google. Google is so up at that resistance on the daily. It's like right at it. So it would take a lot for that to pop through. May or may not happen. It's already taken out 12. Let me see, 12. 672. 672 is up. It's near its all-time. It's 672. It only went up to 730. Oh, it went up to 750. Okay. Back in '07, 11 November 7. But this is a line of tops going back all the way to May of '08. Very, very strong line. And it's come up a huge way. And as with Baidu, the peaks, whenever these have outrageous peaks, they just come slamming back. Now, this peak still has a little bit more to go before it reaches the July 11th high, July 2011 high. So it still may have room on the upside, but I'm just worried that it's busting up against this trend line that goes back, oh my goodness, let me see here. It's a 3-year trend line, so, you know, so goes Google, so goes Baidu, and that's why I like them both for a little bit on the short side right now. I don't know if they can keep up this move past these peaks. And also T1 on the 21 minute is starting to loosen up a little bit. But T5 looks pretty strong, so it could keep on going. I'm really not sure about Google. It's way overextended. If it goes up a little bit and you're still in it, definitely I would take some off the table. Obviously, money that's not going into Europe is coming in the United States. The carry trade is still on. It's still risk on for the Aussie yen, and it seems to be moving up slightly until something jogs it, or some kind of fear comes into the market. So we'll just have to wait and see how this moves. If this breaks out of this trend line, then this 1272 extension is going to bring it probably around 700 or higher. So this is basically a wait and see to see what happens with the market, to see if the S&P, let's get back to the S&P here, to see if the S&P can break out. And if it does break out, it's going to 1460. If it caves from here, then it probably come back to this old trend line at 1361. So this is a huge potential move to the downside and to the upside. There's a lot at risk here. So you have to watch this very, very closely. You have to be looking at the vol spread every day. You have to be looking at tick charts. You have to be looking at momentum indicators. And if this busts out right here past 1420, this is short-term blitz to the upside, and that would give this a very, very nice head for a Head and Shoulders. So we'll wait and see what happens. Good luck trading, and I'll see you at the next update. No update tomorrow night because it's for the weekend, so I will talk to you Sunday night. Have a good evening and good trading.